Good day, traders. This is Zone Point FX, where we wait, trap, and strike. So I want to unleash my strategy in a little bit of full package, like the way I do analyze, like the way I do to my trade, like with confidence. Because on my trade, I check out for possible or key level. That is why lines are always much on my chart. Let me just put it that way. That is why I do have a lot of lines on my chart. That I send my chart to somebody like that. I'm on a Telegram channel like that I used to. That is why I start learning from a chart. So there's this guy there. I sent my chart to him. Sent my chart to that group, and the guy was like, "Guy, why your chart? They always like line. And I told the guy that it's not about the line, is about making out profit from that line. It's not about your chart being fine. Your chart may be very fine, very neat, very readable, but at the end of the market you won't see more profit to draw out from it. So the major thing from you just know how to analyze your chart. If you like, use a lighter, anything trading view can give you at all. The major thing is for you to get that money out of that chart. So now let's dive into our charts. I just use that to do little illustration, little example, little talk, so little intro. So now we do use line a lot, line chart, and the line chart is gotten from MSN strategy, because I'm a trader that trade MSN, SMC, should I say ICT. I joined everything together just to make one thing, just to make one beautiful concept for my own way, as far as say they give me the money. So now let's go back to, I'll be going back to my line. That's the beginning. No, my line now, there's two things I want to do on this monthly. I want to mark a previous strong level price has been rejecting from over times, over years, over months. A key levels price has been reacting from, that is very obvious. So now we coming to the charts here. Now you can agree with me that price, there is this level here, this level at the middle here. And note again, when you are marking a key level is not just a line alone. Is like a box, like a box. So after this line, we change it to candlestick to mark a box to the upside, mark a box to the downside. So I will do that for you. This is a level here. This is a middle level here. Price has been reacting to. Reason why is that when price was coming, when we use our line chart, when price was coming, price move. You first use here. If you zoom in, tap in, come down, it's break above, use this same level here, inside this level here, move, come down, still use this line here, move up, tap down fully, move up, tap down, move up, it break this level. Hope you are seeing the way I'm analyzing it. It tap here, it tap to this place, it do what? It taps back to this region, it comes down, it do what? If we change this to week, we see that price actually tap to this region, tap to it, come down, move up, come down, move up. So we can see this middle range, R is very strong. So again, which level again are we seeing? We are seeing this level again too, because price use it. This is 2016. Price use it here. Price broke it, and price is using it now in 2025. That's a level there. Also, we are seeing. We also saw this level in case if price come there. We are seeing this level here. You can see price use it 2004, break it, use it again here. Hope you are seeing the way I'm pulling out the chart, the way I'm pulling out the chart. So that is that. So there are still some key levels again. You try to check very well. You try to check the chart very well. This level here, price use this level. You can see how price move up, move down, break, tap. Okay, let me explain it. You can see from here, from this level, when price tapped in here, price break, tapped in, break into this level a little bit up, use this level again, break it to use this level, come and use this level again, use this level again. You do what? Break down, use this level again. You can see how it's using. You can say price is breaking up, maybe to retest to this level, to tap to this level, and come down to do what? Break to this level, move to this level, break to this level. Anyhow the market wants to do its thing. I'm just analyzing. So that is that about the market. So once market is getting towards this hour line, we'll be very cautious of what market is going to do. Let's mark this level too. This level here too is also a strong level, because for price to just move out from this key level and come down, there is also a strong level around that price use. So let market price may use it later some other day. So I'm just doing analysis of how the market, this is the secret of these things I'm marking now. When it will save me stress for years, because once price break a level, I know where it's going to, I know where it's testing to. But there's also other things I'm going to consider to confirm that. So now let's change this to candle. Changing this to candle, I know we can't see what we marked very well. We can see how price is using it. Price broke it. You can see how price is using it. We can now mark this level too. This level too we are seeing here, we can mark it as a strong level also. You can mark that level that we are seeing as a strong level. So we can see how price is reacting from those levels. And we can see that is where this price is doing currently reacting from. The major thing is just for you to do what? Check through your chart very well. Check through your chart. Every obvious, and there's one trick again, every obvious swing high and swing low. Now in this 1 month now, we'll be dealing with swing high and swing low. So every obvious swing high and swing low, that is a important skill level. Just pick it and check through the whole chart for years back and see how price reacts from it. So that's how we want to do on monthly. That's just what we want to do on monthly. Nothing much, nothing less. I'm going to explain another thing to you. Let me just change them to green, so that if price is touching them, I know that I'm expecting some reaction. I can just write it somewhere, like journal it down somewhere, that green line means monthly key points, red line means weekly key point, or trend line key points. So now I want to use trend line to confirm my key point. I want to use trend line to confirm my key point. Let me start from this angle here. This thing, it will take a lot of time, but I just need to explain this. Let's start from this angle here. This is a trend line. Let's use our line chart to give us more better view of the chart. So that's why I love my line chart. My line chart is just like drawing a biro and using biro to sketch. So it will save me stress of candle noise and everything. That is one advantage between trend chart line and candlestick. So you can see now this is a trend line. So now you can see that once price was doing what, everybody just pay attention. From here price move up, test this trend line, move up, test this trend line, move up, test this trend line, move up. So once price gets here, price did what? Price broke this trend line. Are you seeing it? Price did what? Broke this trend line. Immediately price broke this trend line. Immediately price broke this trend line. We already know that market is what? Market is selling. So immediately price broke that trend line, we will be anticipating for buy. I will be anticipating for sell to do what? To another key level that market may probably reject from. Hope everything I'm saying is making sense. And how do you know these key levels market is going to react from once price broke through that trend line? You know, price to create, I think I need to do this price, because this is like a fresh, I just want to unleash a secret. Price creates, let's say we are in an uptrend, price come like this, create a higher low, break structure, create a higher high, come back, create a higher low, break structure, create a higher high, come down, create a higher low, break structure, create a higher high. This thing I just did is just a textbook version. There is more in depth to this trend analysis, uptrend and downtrend analysis. There is more in depth version. This is just a textbook version you can see outside for anywhere as a newbie. They will tell you once price create higher low, it's a break of structure, it's going up, it's that and that, but it's just a textbook version. That's what I would just say. But let's now say that this is a trend line. This is a trend line. Market was doing what? Creating. Share. This is the trend line market was creating. Now, when market now get to this point, market now did what? Break this trend line below. Once market break this trend line below, what am I expecting? Where am I expecting market to react from on a key point, as a key level? You know that this is, let's say this is monthly time frame. This is our swing high, which is higher high. This is our swing low, which is higher low. This is another swing high. This is another swing high, which is higher high. This is another swing low, which is higher low. So this market that break this trend line now, I'll be expecting it to react from this previous swing high. So I'll be expecting it to do what? We test to this level and do what? Maybe probably moving up back to another key level, or what? Break below this and probably retest back here and continue downward to another key level. Any one of those two, we don't know what market will do, but that's what we'll be expecting. Like what we'll be expecting. So let's now go back to, okay, don't let me delete it. Let's now drive it back to the chart. We can see that with what we explained, there was an swing high, swing low, swing high, swing low, because monthly, and this is a what? Previous previous higher high that price did what used. Shey you see that, let's just assume this, we are starting analyzing from beginning of this chart. We have not seen this previous thing that is forming here. This is what price used. Hope you get me. So now let me just delete this. I just use that to explain one or two things for you. And you can see that immediately price used that level, price did what? Shift up to break this, to break price shift up to break this structure, giving us what? A break of structure that the market is uptrend. So those people that trade in around 2007, 2000 and in the early 20s, the market has not given us enough data. I don't know how they do it, but I believe that when price was around this place, there was a data, because Forex started around 90s, so there was a data around this level here. There was a data around this level to this level here, that this place I mark down my line, there will be a data around this level that price we used to come down backward. So that's just what I want to explain. So you can see this is our trend line that give us that market was selling down, and market is this key level, tap up. So let me delete this. And this is another trend line too, this to this. And when market was here, market did what? When market break that trend line, market buy up, come down, tapped into a key level, tapped into a key level, move up, tap down back to touch this trend line, move up back, it tap back to touch this trend line, and do what? Move up before do what? Breaking below. Immediately price break below, immediately price break below, we'll be looking for another what? Another point of interest, which is this. This level has been used, this level has been what? This level has been used already. People that trade MSN now, this level has been used. And once a level has been used, it has been used multiple times. So we do not expect, and price has already what? Break a trend line telling us it's selling, that is not buying. So we are not expecting price to do what? To also retest from this place short, because price has used it multiple times. So what we do, we look at for another key level. Let's just change this to candlestick. Maybe another key level, and the key level I saw and I marked is, I'll be marking this level here. But that one, there are later things. I just want to explain one or two things there. This key level here, which is a bullish gap, and it's also a balance area. So which market did what? Market tapped into and start doing what? Start moving up back. You can see another confirmation. This is how we got this, like this confirmation. This is how they get it. And over time, price has been doing what? Has been using those key level repeatedly. So you can see price broke down this low. We test down. What immediately price break down this trend line low, we mark a new trend line here from the apex here to what? To this level here. Let's change this to what? to line chart. We mark it from that apex to this level here. To this level here. Hope hope you are following me. Hope you are following me. I'm just trying to analyze how monthly is. How monthly is. So now this apex, this trend line we mark now is our current trend line we are working with, and price did what? Price broke this trend line to the upside. When price broke this trend line to the upside, it tried to come down to retest and it's trying to push it up back. But that's not what we need. So what do we want to do now? We want to mark we want to mark supply zones. We want to mark supply zones where price will do what? Sell from. Supply zones where price will sell from. And our supply zone will be within this trend line. That will be like an obstacle. Once price get there is a sell liquidity. We are not expecting price to sell, buy long above there. We are expecting price to grab liquidity there, put down a little bit before moving up till it will do what? Finally either take out this trend line completely, or do what? Or tap back to this trend line up here. But that will be what? Future purpose. This is monthly. This thing that I'm just saying that it will take years. It will take years, 2 years, 3 years, depending on how markets want to move. So let's delete this. Let's delete this. We just have it in mind. So now, what's the next thing I'll be doing? I said I'll be marking demand zone, which will be acting as a what? A liquidity gap, a sell, a buy side liquidity gap, a buy side liquidity gap. So what will I be doing now? From this upper part, I'll mark this level, which is inside the liquidity, inside the trend line. Mark this level. Let's change it to red so that we know. Let's change it to faint red. I'll mark that level 1. I'll mark this level 2, but this level and this level, they are almost close to each other, so I will just mark the top one and leave this down one. I'll mark this level here, which is what? Which is aligning with what? With a zone. This level is what? Is aligning with the initial marked zone, which is very strong, like a very strong level. I will mark this level here too, which is what? Aligning with what? A initial zone. I will do what? I will leave this level here because it's close. It's close. This level here is close to this upper one, so this level can just act as an liquidity, but I don't need to disturb myself with that. So you can see how we did what? How we mark our chart, like how we mark our chart, major places we're expecting market to do what? We ask for. So now you see how we use line charts to get that. So that's just what we want to do on monthly. Nothing much, nothing less. That's just what we want to do on monthly. And there's another trade line that they used to use for confirmation. People that trade MSN now. A SMC trader will tell you a trend line must not break through a body. Once it breaks through a body, that means it's not more valid in that direction. But for MSN now, trend line breaking through a body is what they call their confirmation trend line, confluence trend line, confluence trend line. So this is what we'll be doing now. This is a trend line here. Oh, sorry, I forgot. I'm back angle. So this is a trend line here we'll be marking. And this trend line I'm marking here is for what? It's for MS and R, which give us what? A strong. And why do we use that trend line? It's a two swing low that price has reacted from over the years. you are following me, it's a two swing lows price has react from over the years. So it will act as a strong level of trend line that this current market that is doing will react from put down to. So if assume I want to enter aggressively, if I want to enter aggressively on this monthly, maybe I don't want to go down to lower time frame to check lower time frame confirmation, I'll just put my Excel below this level here, mark here, down here to this next level here, just do what? Tighten. I'll tighten my stop loss, tighten it a lot. This is what I'll be doing on monthly. I don't want to look at what higher time frame is giving me. Assuming I'm a swing trader. If I'm a swing trader, this enough, this thing that I just spot now is enough for me to enter my analysis. And what again will I be looking at? Fine, price has already what? Break this trend line. Another confirmation I want to try to put in to know that price is doing what? Pushing up. Fine, price has do what? Price has broken this confirmation line. Okay, we use this for sell, for where price will come touch to and retrace back, and we use this also for where price will continue to buy from. So we can see that 2 point, you can see that 2 point, how it is. So now I'll change this to candlestick chart, but I just need line to understand better. Line give me a better understanding, reduce stress of wicks, the noise candles of from the wicks. So now we know price has broken above a existing trend line that was forming, and now is now shifting from sell to what? Buy. How do you want to confirm that? There is a way to confirm that price is shifting, like price is giving us a reversal to the upside and to the downside. There is a way to confirm that price is giving us a continuation trend. But in this kind of move, price is doing what? Giving us a reversal, because price did what? Price swept this level. Price did what? Swept this level here, making this a protected high, making this a protected low. Rather, price sweep this level, and when price is coming, price did what? Price shifts back a little bit and tap into our key level to move up. So now there's something like there's something for an SMC trader. SMC trader will tell you that price is expecting price to, some SMC trader will tell you they are expecting price to come down here, to come and take out this inducement liquidity and tap into another block here before the what? Going up back. But I can bet you, if monthly can reverse back to this level, we are not expecting buy again. Market has already shifted. We are not expecting buy. But to confirm if where price is going to retest to, because surely price need to retest, take out an inducement, retest before moving up. So where we price retest to, that is where we now be using what? We'll be using a Fibonacci retracement tool. So using Fibonacci retracement tool, we put it at this current low to this high that has not been taken out. Taken out. So what are we expecting the price to do? Now that we have seen this, initially my 0.5 and my 0.6 is a liquidity area. Above it, because you are looking for a buy setup, above it is a premium zone. So if you are looking for a buy setup and we are in a premium zone, we'll be counter trading, which will be selling to a discount level. And once we get to a discount skill level we mark, we'll be doing what? We continue our buy. So now this is when we now use a candlestick back. So convert it to candlestick. So now we converting it to candlestick. What we want to check out for? We want to check out for levels below the 0.6. So if you ask me level below the 0.6, what am I seeing? I'm seeing what? I'm seeing an inefficiency, an imbalance, candle. An imbalance candle. There is difference between imbalance and order block. There's difference between imbalance and two difference between imbalance and order block. Yeah, I think I need to really say that so that we can all know that there's a difference between imbalance and order blocks. There are two different things. So what do you want to do now? I want to mark this. What am I seeing first? The first thing I'm seeing that my eyes is going to, and there's something again I call price balance range. There's a price balance range, so I think I would take time to explain those videos. So you can see that I will explain it. There's an imbalance. No, there's a fair value gap here. Why am I doing mistake? There's a fair value gap here, and there's an imbalance at the other side. This is a strong level. There's a fair value gap. Let's shift it to this place. There's a fair value gap, and there's there's also a imbalance level there. There's also an imbalance level there. Hope you are seeing my analysis, the way I'm analyzing the chart. That's why I said don't get bothered about how the candle is, or how the candle is forming, or the rest. Just focus on the analysis and forget about the candle formation. If possible, if you can use line throughout, use your line so that you can understand what the market is doing. And also, if you are changing this to a line chart, we are seeing what levels are we seeing to mark levels from, since this is what I'm coming. I'll be using this. Since this is 0.5 and 0.6 is a level which I consider as a liquidity. So what will I be doing now? I'll mark this level here. I'll mark this level here. Sorry, I'll not mark the level. I don't need to talk. I'll mark this level here. I'll mark that level there. Yeah. So we are waiting for price to do what? To do his thing. Let's see what price is going to do. But in a nutshell, we want price to do what? React from this current level is reacting from, which is a resistance level. Come down to this place, enter into a support. That's just what I'll be expecting. Expecting price to do what? You can tap into this point here, into this trend line here. then later start down back moving down back. Now it's coming to tap level into this level here, and once price tap into this level, you'll be waiting for its reaction back to close into this box back. So once price close back into this box from here, or maybe close back into this box, we start looking for what? We start looking for buy confirmation. Start looking for buys. Let's just looking for buy confirmation. So you can see how we do what? How we analyze the trend. You can see how we analyze the market. Did what is reacting from that level. So that's what we just want to see. But let me delete this. I'll be going to lower time frame to do what? To get a better confirmation. Let me delete this too. Because I'll be going to a lower time frame to do what? To get a better confirmation if it's aligning. The only thing I'll believe in is this level here the market react from, and this level the market is going to. So now, since we already know what market is doing on monthly, and we already mark possible key level market is going to react to when going up, what do you want to do now? Want to go to our weekend? I'm very tired. On our weekly too, there are things we want to see on our weekly. On our weekly, you can see that price did what? So on our weekly now, this is the break of structure here. Break of structure to the upside. This is what you can see when, wow, perfect. Now when price wants to do what? When price was after this, there's something I want to explain. Just check. That's why I said you need to check thoroughly through your charts when analyzing. If you have not analyzed that pair before, if it's for your first time analyzing that pair, so you see that when price did what? Price broke structure to this upside, giving us, price was in a downtrend, giving us what? A higher low. But price was unable to do what? Break it back, give us a short play. And later did what? Come to this level, did not do what? Take it down. It's do a first pullback, and any first pullback around the reversal point is what? Is an inducement. And price did what? Come and when price pull back, price did what? Come and take it all the way long to do what? To a point of interest here before buying. So price did what? Price take out the inducement and take out the last lower high, a lower low, because this is a lower high that price refused to get to, but pull back to create what? An inducement here. And price did what? Take out this what again? This lower, took out this higher low too. So now you can see that price did what? Come and use this level, and price did what? Is moving up. So which tell us that price is what? Is in an uptrend. Price is what? Is in an uptrend. And price did what? Take out this liquidity inducement up here, broke above it to tell us is a full uptrend, and broke above the trend line also. Hope you guys are following me up. But because of this trend line and the imbalance we saw earlier. We are not expecting price to come to this level, break this trend line downward. That's another miss. Our daily time frame. But on our weekly, let's use our Fibonacci from this low here to this place here. So we can see that this level we mark is what is below 0.60, which price may sweep little. This is what I'll be expecting on that. If price is coming there, price will first come here, tap into this 0.50 to create a form of inducement. We will be doing engineering liquidity, tapping into this level here, or if there is a imbalance of fair value gap level here, that price we use tap into. Now do what? Sweep below. You can see how I drew that. So that's what we'll be expecting. So let's just draw a confirmation to back this up. A confirmation to back this up. And a confirmation to back that up is this level here. This level here. This trend line level here. Because that's a what? That is a trend what? Trend line. I'll be deleting this Fibonacci. So you can see that's a trend line. Price you tap up, break down above, break above it high also. So that's a trend line. So now that we have already gotten that, now that we have already know that, so what will we be doing now? This key level here that we are expecting price to do what? Price to react from, which is still what? Which is still fair, for with our analysis. Hope you guys are following. So what we'll be doing is, there is a short pullback here first. That pullback is also what? Is an inducement. So what we'll be doing, something like this, tap into this level, up like this, come down like this, and do what? Maybe tapped into this level or somewhere at this resistance, and I will see a close above like this to do what? To continue selling up. Broke once it's selling up, I'll be careful of this level, because this level has already what? Giving us a top, a double bottom, and I want price to tap into this trend here. We test here, check this level here, which is a strong level. Price may want to do what? Want to do like a form of inducement there, taking it out, moving it up. That is just literally how markets will be moving till it gets to this my point zone I marked at the top. Till I get to that zone point I marked at the top. So I'll delete this. This. So now what do you want to do now? You see how we are using those weekly, monthly, from like the way they are aligning. You can see that we are on this our weekly levels. This weekly key level now, we are expecting sell. Some trader will be doing what? Will be expecting buy. But me, I know that I'll be expecting sell for a little short while, to do what? To do a retracement. The short is doing a pullback retracement before continue buying. Hope is making sense. So now let's go to daily. Now we get it to daily, you can see what I'm saying. Now on daily we can do what? We can zoom in. On daily we don't need too much noise. We don't need too much noise on our daily, and you can see what daily is giving us another view entirely. Daily is giving us what another view entirely. So the view that this daily is giving us is, you see, when we zoom in, we already know that market is in a buy scenario, is in a buy trend. We already know, due to how we analyze it from monthly to weekly using that key point. And anytime we be, all these green lines are marking, they are my key points from higher time frame. Anytime price is coming back to react to that area, I'll be watchful. Once price gets to that area or get close to that area, I will be very watchful for what, for a reversal. Since I already know that price has broken a sell trend line, is buying, for I'll be watchful for a sell reversal and to buy. Hope you are getting me. I'll be watchful for a sell reversal because a sell reversal is just for a short time, and a buy continuation will continue for a long time. So that's just it. And now what do we see? We have this our break of structure still intact. Our break of structure still intact. Our sweep still what? Still intact. Our sweep is still intact. So from this from this to get a better view, now we'll be using our Fibonacci again. From this break of structure to this level here, we'll be marking this. So, and you can see that because price has already, do you know why I use this break of structure? I did not use the protect this low swing low again, because now we are on a daily time frame, and two two price has do what, tapped into this trend line, tapped into this trend line and is what, is moving up. Price is coming at the long run to do what, to sweep it and tapped into this level. This is the level we are looking at the long run before price continue to buy. Hope you are not getting me wrong. And price may do what, price may decide again not to come to this level, since price has already tapped, the price that break this level tapped into this trend line level here, and this trend line level here, let's check if there was an imbalance there. Let's use our, sorry, I deleted something I'm not supposed to delete. So let's delete this. So let's use what, let's use candle. Now candle, we'll be using our candlestick chart. You can see how I'm analyzing the chart. You can see how I'm analyzing that chart, the way I'm analyzing it. So what do we see? Can we spot an imbalance? No, we can't spot an imbalance. So since we can't okay, no, since we can't spot an imbalance here, that price used, so price will be using this level here as a liquidity. Price will be doing what, using that level as a liquidity, because ask me why did I say price will be using there as a liquidity? Because initially price did not create an imbalance that it will fill. Price was just moving slowly somehow, and here now, after this short pullback, price now creates an imbalance. There's a difference between FEG and imbalance. We mostly use imbalance in higher time frame, but in lower time frame we'll be seeing FEG if you want to do entries. So now, from this imbalance now, you can this is an imbalance. Oh, how am I always making this mistake? This is an imbalance, yeah, and this is also a what? A balance, a price balance range. A price balance range, because this is bullish, this is bearish candle first, and this is bullish candle, and there's a gap in between them. So this is a strong confirmation that price is going to do what? Is going to come back into this level. So if price now, if I want to target my first TP, I'll be targeting this place here, this liquidity here, because if price wants to come, price, our whole initial trend is what? Is buy. We are just doing a sell counter trade, so we need to be very careful when doing a sell counter trading, so that we won't be selling when we are supposed to buy. So we'll be looking for the sell to this level to tap in here. If price tapped in here, you want to do what? Create an imbalance. If price is creating an imbalance, to move up a little, we want to come and do what? Take out this liquidity, and also take out this liquidity here, like to tap into this level before moving up to this level on lower time frame, or if as time goes on, because this little thing I analyze now, it can take months. So that's why I said those key points I analyze is not key point for something that will happen now. Those key points are key points for trader that people that do swing trading. They can put a position for a long time, and the position will be holding despite the whole noise in the market. Hope you understand. But for a swing trader now, on a monthly now, I just want us to understand why. So since, let's use line chart back before I delete line chart. since I'm what since I'm already considering this place I circled as what? As a liquidity, what will I be doing now? I will be marking a level that price will do what? We act from. And don't forget, I'm trying to do what? I'm trying to build a bias. I'm trying to look for a strong level that price will get to do what? Continue moving up. But you can see on my 1 day is already giving me what? A trend line. My 1 day is giving me a trend line. My 1 day is already giving me a trend line. The trend line is this. Sorry, change this to black. Cancel from here. The trend line is this. You can see how analyzing the trade. You can see how I'm analyzing the trade based on I'm analyzing based on the market move. Based on the what? Market move. This is a trend line, and this is a trend line, right? Agree with me. So what I'm expecting from this market is market to break this trend line below. Breaking that trend line below, it will first tap into that inefficiency. After tapping to that inefficiency, it will now sweep that liquidity that was created from the swing high to the swing low, from a swing high, because this is a swing high here, to that swing low, to that swing low, to that swing low. So once price do something like this, you see, I'm just trying to analyze future things in the market, how market will probably is possibly going to move. So after price do something like this, we can see that this level, that price, after I try to place my Fibonacci very well, you can see that this level that price want to tap into is also what? Is also a liquidity level. And you can see immediately if price taps into that level to move up, it will be creating a form of equal high, a form of equal low rather, which price will later come in future after price touch this trend line or touch this liquidity back. But I'm sure it's going to sweep it and touch this trend line. It will now come down full force to do what? To take out this equal high stuff and tap into one of these discount zones here. Let's see if one of those discount zone align with a higher time frame key level. Okay, okay, price use this. Okay, it may decide to do what? To react around this level. Yeah, it may decide to react around that level before what? Before now, if it's, or we should say it will react from this level before it now do what? Before it will come down, maybe close above this level, but a week will be here around this level. So if price did something like this, we now say price, price is still what? Is still in a uptrend. But if price is doing something like this, we know reason why the price is doing that and where the price is going to. From the short explanation we did now, we understand why we'll be looking for a short sell and later looking for a buy and later looking for a long sell before looking for a full buy. Hope is making sense. But over time, if this is just what we'll be doing, so I just need this. I don't need this. Let me delete this. Delete this. So over time, we know that price is doing what? Is reacting from this level, and this level that is reacting from is a key level from higher time frame. So we are not expecting price to exceed this higher time frame key level. Anything market want to do, we are expecting it to sell down because on the same higher time frame, as well, we know that price has already what? Taken out a liquidity, a trend line, a trend line, a trend line, and that trend line, I can call it trend line liquidity, and is what? Is trying to do a push up. But before it do a push up, it will need to do some little play out. Price can't just continue moving up, moving down. Everybody want to be buying, and everybody want to be selling. And why did I consider this trend line strong? Is because in a trend line, once price touch a trend line 4 times or 5 times, we consider it a weak trend line. And in this analysis, now this is the apex price use. This is 1. Price touch it again here. This is 2. Price did what? Touch it again here. This is 3. Price touch it again here. This is 4. We can see this is 4 times already that price touched it. So we don't need them. We don't need this. I can just use it to explain one or two things to us so that we can understand what we are doing. So if you love this video and you find it interesting, helpful, I would like if you can click on the subscribe button so that you can get more notification of this, like and share, and also comment so that I can have the inspiration that what I'm actually teaching you are understanding. And if you have any question, put it on the comments box. I will definitely reply or give you my WhatsApp number to message me and we'll talk on WhatsApp. So, and if you need me to do a short video after we communicate, just for you to understand, I'll do a short video. That's not a problem. So now, from our analysis now, you can see that from our higher time frame, we are expecting buy because price has already do what? Taken out a trend line. It has break through a trend line. On our weekly, on our weekly, is almost the same thing. We are expecting what? Buy. We are expecting buy to on our weekly. So now coming to our daily now, things is now doing what? Things is changing. Things is changing in the sense that price is reacting around a buy side liquidity. Hope you understand. Is reacting around a buy side liquidity. So I want price to, and for price to react around the buy side liquidity, it will only give a short time buy that price is still later coming to sweep before taking out that liquidity. And this is the short. You see that when price break this trend line, yeah, it's kind of retested back to this key level. It's now pull back to this key level on higher time frame. This is a year key level that has been used over years, many years, right from back from 2003. Price has been using this level right from 2003. So it's a key level, very strong key level. So price touched it and do what? Move down, back. Moving down, it create a liquidity first, a first pullback, which acts as a inducement liquidity. Price is coming to sweep before moving high continuing, which is, you can see prices within this area. So on our lower time frame, we want to see a sell rejection, and once we see a sell rejection, we are confirming that price is going to probably take out this liquidity here. Maybe it's taking out this liquidity, tap it to our trend line. We don't know how market wants to do it, but anyhow the market wants to do it, we already have a bigger picture of what the market is doing and how the market is forming its thing. So, and to do what? To continue moving up. So that's just it. So this continue moving up now. Where do we want, if price is moving up, where do we want it to stop? I know I explained it earlier, but I still need to explain it again. As price is moving up, as price is moving up, moving up. If price has this price that we are expecting for price to sell now. So where are we expecting price to get to? We are expecting price to do what? Get, once price give us a new sell now, a new sell, and already price has given us that sell, and we know that this price is going up to another key level. We will join a trend line like this. There is something I want to explain. On monthly time frame, we join a trend line like this. But because of this angle, that is why it's doing like that. We join a trend line like this. I'll be expecting what? This trend line to do what? This sell that, this buy that we are, new buy we are expecting now, we will be expecting it to follow this trend line level to do what? To buy up to a next key. After it break this, we will expect it to go to a next key level, which is this key level that is strong. We traced back from it, move up, we trace back until it do what? Get to this key level, get to this trend line, and what? Just follow my analysis, and what? And this last, it will be expecting it to do what? Move I all the way like that, moving to touch this trend line. Once price touch this trend line here, we look at the reaction. Did price try to reverse back to give us a sell? If price try to reverse back to give us a sell, that means is expecting this key level, which is green line, is respecting it, and we are expecting a new sell to another key level. That is just how the market is. I just hope I not bother people with too much talk. You are able to grab the facts about the market. So now we will now go back to what our analysis. We want to point out something on our analysis. So what did I want to point out? So I'll be using my chart back, and I'll be deleting unnecessary things. I'll be deleting this for now. I just use that trend line to explain something, but it has not given me the thing I'm expecting in particular. So on my daily now, you already know I'm doing what I'm expecting a sell from this level on my daily time frame. I'm expecting a sell from this level. So any trader that is buying from this level, I can't say, but I'm sorry for them. I'm sorry. Any trader that is buying from this level, I'm sorry for that trader, because again, if you are using line charts, okay, yeah, I think that is that. So let's go to a lower time frame to see. We want to confirm this our sell. Like we want to confirm our sell. So let's go to a lower time frame, which is, let's use 4 hours first. Still on the line chart. Still on the line chart. So on 4 hours, you can see that, or let's use 2 hours. We don't actually need much on 4 hours. So let's just do what? Let's just use 2 hours. So on 2 hours, let me change it to candle so that I can understand. Let's zoom in. Yeah, on 2 hours, you can see how prices do what reacting from that level. You can see how prices reacting from that level. That is what I'll be doing. I'll be expecting sell to the downside. So if you ask me, boy, what is your first liquidity on 2 hour? Where do you want to target first? But initially, I know that I'm doing what? I'm selling to a key level, which is this on 4 hours. I'm selling to this trend line key level. Hope you are getting me. I'm selling to trend line this trend line key level here. That's what I'm selling to. But and there is also a strong level for monthly. So that is where I'm probably selling to before buying. I just hope if you follow my analysis from the very first beginning, you will understand what I'm trying to say. So I don't want to bother us too much with too much talk. So on let's just go to 1 hour time frame. So 1 hour time frame, we are waiting for what? We are waiting for an entry and where to. So on my 1 hour, assuming I want to trade this now on my 1 hour, I didn't know price is reacting from here. Some people will tell you this is a break of structure. Yeah, because there is a break of structure here, they are expecting price to. I'm just giving analysis of what some people will tell you. They're expecting price to do what? To do what? If they'll tell you price is rejecting from somewhere here, fine, price is rejecting from somewhere there, but expecting the price to do what? Come down here and buy and continue buying up, which I'm not sure market will do. Market will not just come down there and continue buying up. Market will be selling to a level. We spot a level on 4 hours, a liquidity level that price has not swept at all. I will only buy once price swept that liquidity. I will only buy once price swept that liquidity. So what will I be doing now? But what can I spot here? I can spot an imbalance. So I'll be expecting price to do what? React at the 50% of that imbalance. So I don't know why I keep on doing this shit. So I'll be ending the video very soon. So from here to here is what? Is an imbalance. Like in one video, I did explain a lot of concepts. So if you are able to check the video very well, listen, watch it over and over again, you will understand one or two things. So from this point, if you ask me that I should place my Excel, and TP from this level here, I may want to enter aggressively to this level, and I'll be doing what? I'll be targeting here, because I'm still waiting for what? I'm waiting for price to do what? To retest back to this level. People that trade MS and R, I'm waiting for price to do what? Retest back to this level, because if you change this to a line, you see there is a level there, and once there is a level there, you see why line chart too is also very very important. You see why line chart is very very important. Now we are looking for sell. All our setup is sell. We won't be buying. So we are waiting for price to, we said first pullback after price break a structure is what? Is a liquidity. First pullback after price break a structure, the first pullback is a liquidity. And in this went liquidity, there's a full video and knowledge about liquidity. Liquidity is another thing on its own, but you understanding liquidity very well, you can trade any strategy you want as far you're applying liquidity to that strategy. So the first pullback now, this is the first pullback, which is what? Which is by inducement. Which is by inducement. IDM is inducement in my own way. So I'll be waiting for price to do what? Take out this inducement, tapped in here, and tapped in here before coming to my imbalance. This is what I'll be waiting for, because this is a key level here. This is a key level here. This is a key level here. A and a V level is another block level. That is the way I do see that because it do apply in chart almost all the time. This is a level here. I'm expecting price to react from one of these level. Once price react from here, I would, if price, because I've seen a break of structure upside, does not mean I should start selling, or because I see that price did this. I'm still waiting for price to take out liquidity, which is this. Can you see that even before we close this video, you can see what price is actually did, that is coming to aim that liquidity. So let's see the reaction. Yes, I just need us to, I know this video is long, but if you can have the patience to watch it to this level, I believe you you are able to get one or two things out from it. One or two things out from it. So you can see that price is doing what? Is reacting. Price is reacting from here. It's reacting from here because we want to do what? We want to come and take out this inducement, tapped into a other block here before moving up. Hope you are following. Hope you are following. Is it making sense? Let's use candlestick to see. So you can see this long impulse move. You can see this long impulse move. Where is he reacting to? We marked here initially. But price did not do what? Did not even respect our other block we marked. But nevertheless, let's see how it's going to go. The next candle, we are expecting the next candle to close above that level I first mark, this level I first mark. And you now later come, after price tap to this level, you now later come and tap this and enter the 50% of that inefficiency gap. So to me, I'll be tightening my SL to this level. I'll be using this level here to tighten my SL. Yeah, to me it's okay like this. To me, it's okay like this. Some trader will be trading this 1 hour to the up, but because I know we are in a sell position, we are in a sell trade, I will be, because we are in our overall market is still in a sell till price get to this trend line here that we are expecting. Once price gets here, price has to what? Sweep a liquidity, or if you shall follow up from my higher time frame, you understand. But you can see what happened there. That is just a small thing. That thing that we want call that 1 hour is just a small thing inside this candle that is forming for today. Inside the weekly candle that is forming for the week, it's just a small move inside. So by the end of this week, we're expecting a candle to come down. But don't forget, we are still expecting this level, price to come to this level again. So on our daily too. So that's just how so once price is coming and get to this level here, we understand that this price is trying to do another thing. That is just how to do the analysis generally. So that's why I call this analysis a secret analysis, a edge. What your so-called mentor will not explain for you is rare. For some mentors did not understand this, but this is just a simple logic behind the market. But some mentor will never explain it for you. It's not because they don't want to explain, it's just because they did not understand it. So I just want us to wait and see the reaction of this candle before stopping the video. You can see how price stick to this key level up here, which is that green line. Price did what? Stick to it, like glue it like a magnet. Let me just delete this so that it will be confusing people. So you see how price did what? Glue to that place. Price glued to it like a magnet. Price glued to that place like a magnet. Now come to this inefficiency level here. Now price coming to this inefficiency level, me I'm not buying yet because I know price is still coming to fill in this inefficiency completely. So what will I be doing this? I will be waiting for sell. No, I'm waiting for sell on EUD. I'm waiting for sell. I'm waiting for a retest back to this key level here. Open close can do, and I'll mark the week. So all these things are things that I do use inside my strategy. So I can even still tighten it to this level if I want. I can tighten it because due to what this is not there. I don't know where I got this from. Oh my god, what happened to Virgin? Just leave it like this. Don't be greedy. Just leave it like this. So we are waiting patiently. I'm waiting for that to happen for the whole time you want to use before selling. So if I have to put a buy limit, I'll be put a sell limit, I'll be putting the sell limit around this level. So stay blessed, stay cool. But let's check 15 minutes. I don't want to explain entry for now. I don't want to explain entry for now, but you can see price after price book that structure. The first pullback on 15 minutes was even actually this. Assuming I've come to 15 minutes, I won't have placed my stuff there because the first pullback was this, which price did not swept. You see this, and price is doing what? Moving up. And price sticks to this level. And there was push down. And you can see once price get to this imbalance, that is inefficiency area, that imbalance, you can see that candle that move up. Well, when price get to that imbalance, price is doing what? Trying to push up. And price is trying to push up to what? To a key level here, MSN and. So you can see how sweet it is, But before price will reach here, this is where another thing coming now. There's something we call engineered liquidity. There's something we call engineered liquidity. We are still going to talk about that. Before price we get to this level here, before price we do what? Before price we get to that level here and start coming down all the way back, we are waiting for price to do what? To create an engineer liquidity, to engineer a liquidity close to that point of interest. What do we mean by engineer liquidity? To push up like this, try to sell down a little bit. So price trying to sell down a little bit does not mean price is going to sell down completely, but it's just only trying to trap in early sellers. It's just only trying to trap in early sellers before it will now do what? Come down, do as if you want to enter profit. You'll be happy that yes, my market is coming to profit. It's a lie, your market is not coming to profit though. It's just trying to create that engineer liquidity so that you can have it in mind that market is coming to your profit and you will just go out of the chart waiting for your profits after you come back to the chart. And what you will now see, you see that price has taken you out, tap to this level before doing what? Coming down to your initial move. So you can see how we did what, how we explain that, how we do what, how we explain that. So I just hope you are following with this video. And how can we get that level that price we that market will do the engineer liquidity to? So we using the Fibonacci. So that is why Fibonacci is kind of important. So we join the Fibonacci to this week. From this high here to this low here, the price is from, you can see, around the 50 and 60. That's where we call what our liquidity area. So we're expecting a liquidity. Don't mind this network. Oh. We're expecting a liquidity. Let's check. Oh, this is almost 1 hour 30 minute video, but I know it's very helpful. So we're expecting a liquidity around this is 0.5 is 0.6. Tap in up to our final level before the what pushing down. So that's just what we'll be expecting from the market. So I don't think I need this, or let me just leave it because I'll be using it to explain 1 or 2 things later in the future. So I think I will leave it. I want to write something. Let me go to my 1 hour. You can see how I get the entry on 15 minutes. On 1 hour, okay, let me just stay on 15 minutes. So I'll be writing a note. Analysis is good too if you know what you are doing, but if you do not know what you are doing, sometimes it can be stuffy and confusing. You'll be like, wow, why am I doing this? Why is this happening to me? I've put all my effort, I've put this, I've put that. Just right, expecting price expecting price to create ng to expecting price to engineer liquidity close to my key level. So that's what we'll be expecting. So far so good. So let's see how it's going to play out. Let's just see how it's going to play out, and let's stay tuned as well. Let's stay tuned. So in this kind of market now, you already do the needful, like the needful to the best of yours. So if market is not coming to your level or is not giving you what you want, it does not mean that you do not know what you are doing. It's just that price decide not to respect your level. Hope you get me. So let's just do this. So let me keep this.